We're at a tipping point in Calgary right now, so if you're a seller, should you be nervous about waiting? And if you're a buyer, is this your golden window, or is the smart move to wait? Let's unpack what's really going on and what it means for you. Before we get to what's happening in Calgary's real estate market, let's take a quick look at the broader Alberta economy because it's still one of the most resilient in Canada. According to the TD Provincial Economic Forecast, Alberta posted one of the strongest GDP performances in 2024, and it's expected to outperform most other provinces again this year. One major reason? Energy, of course. With the Trans Mountain Pipeline expansion now online, Alberta's oil production is pumping along at over 4 million barrels a day, close to all-time highs. Most of that, about 85%, is flowing tariff-free to the US, and export volumes are holding strong. In fact, oil shipments to Asia are even picking up. Now, investment has cooled a bit. Lower oil prices, a firm Canadian dollar, and global tensions, especially in the Middle East, are adding uncertainty. But if oil holds near or above that $67 a barrel, as TD expects, we should stay stable. Outside energy, construction, and healthcare are leading the way on job creation, and thanks to our relative affordability and population growth, Calgary's housing demand is still steady, even as prices start to shift. According to StatsCan, Alberta's rate of population growth slowed, but the province still grew by 20,562 people in the first 3 months of the year, mainly due to permanent immigration and people moving from other provinces. The number of temporary foreign residents in Alberta, meanwhile, declined for the first time in years. And by the way, Alberta just rolled out a modest but meaningful personal tax cut. Starting January 2025, anyone earning up to $60,000 will now pay just 8% tax on that first chunk, down from a previous rate of 10%. That means up to $750 back in your pocket, especially for lower and middle income earners. Some people are seeing their taxes drop by about 20% on that bracket. Now, this isn't a huge decrease, but every little bit helps, right? Retail spending is up, and while caution is creeping in, Alberta's economy is still chugging along. I think it's just a little more cautious. Now let's talk about interest rates because this may play a factor for buyers and sellers right now. According to Canadian Mortgage Trends, RBC no longer expects the Bank of Canada to cut rates further this year. In fact, they think the overnight rate will hold steady at 2.75 throughout 2026. Their reasoning is inflation is still sticky and trade tensions have eased, so there's less urgency to stimulate. Now, keeping in mind, this article came out on July 9th before we received the most recent letter from President Trump with a threat of 35% tariffs in addition to the current ones. I don't personally feel that trade tensions have eased. Our government is planning to have a deal by July 21st, but honestly, Carney is on vacation, and I just don't see that happening. Anyways, I get a little sidetracked when I rant about the government. Back to interest rates. That puts RBC in line with Scotiabank, while banks like TD and CIBC still expect 1 or 2 small cuts this year. So what does that mean for you? If you're waiting for significantly cheaper borrowing, this might be as good as it gets for now. You may want to lock in if you find a great 5-year fixed rate. One more thing that's flying under the radar, Calgary is seeing a surge in new construction. As of June 2025, we've had 8,888 total housing starts, with 4,179 of those being purpose-built rentals. That's nearly half of all new builds this year, an enormous shift towards the rental market. Now, this data comes directly from the June 2025 Calgary Monthly Stats Package by Krebs, linked below if you want to check it out. And it shows that builders are responding to both rising rental demand and long-term affordability pressures. I'm breaking this down fully in my next video about Calgary's rental market, so if you're a renter or a real estate investor, you don't want to miss it. In June, Calgary recorded 2,286 home sales, down 16.5% from a year ago. Now, this isn't a crash. We're still in line with long-term seasonal averages, but sales are slowing down. I mean, we couldn't continue at the pace we were at. I've mentioned this before, but our population here in Calgary has grown so much in the past 3 years that we are essentially setting a new benchmark for home sales as well. Detached home sales are holding steady, but apartment and row homes sales fell sharply, especially under $500,000. The majority of these sales were detached homes and properties priced $500,000 to $700,000. We saw 4,223 new listings hit the market. That's up 11.2% year over year. A lot of that supply is in the higher price ranges over $700,000, while entry-level homes remain scarce. Builders are offloading inventory, and resale sellers are finally jumping back in after sitting out for what feels like the past few years. If you're selling in this market, you need to prepare the home for sale. Cleaning and packing, but most importantly, it needs to be priced right. When the market starts to shift, oftentimes sellers struggle a bit to adjust to the change, but buyers do not. That is why if you're selling, you may feel like buyers are lowballing, and they might be, but they're also quicker to adjust to a descending market. I mean, obviously they want a deal, but in June, nearly 13% of homes that were sold over list price. So it's a fine balance right now of not overpaying, but competing if you need to. Now, the big story is inventory, as it has been. It didn't go up much over the last month, only about 200 homes. Inventory hit 6,941 active listings in June, up a massive 83% from last year. That's the most for June since 2021, before Calgary's population surge. We're not in oversupply yet, but this is a major rebalancing. Now, keeping in mind, we typically see inventory peak in the year and start to come back down as people go on vacation in summer and as we get closer to Christmas. So is this the peak for inventory for the year? It's hard to say, but we'll see. Now, here's where the power dynamics shift. Calgary is sitting at 3.04 months of supply. Last June, just 1.3. That's a big jump. We're now in a balanced market. But as I say, you can't paint the whole city with one brush, because each quadrant, neighborhood, property type all have their own submarkets. Apartments are the closest to the buyer's market at 3.97 months of supply. So there is the most supply there. Row is sneaking up into buyer's market territory at 3.35, and semi and detached homes are just slightly in a balanced market at 2.6 and 2.62 months of supply. So this is where we're still seeing multiple offers because, as I mentioned, some homes are still selling over list. Of course, if you're a buyer, this can be a little confusing when you hear that the market is gaining so much inventory, but you're faced with competing when you find a home that you love. So are prices actually dropping? Yes, a bit. The citywide benchmark price fell to $586,200, down 3.6% year over year, and down $3,700 from last month. Now, to quantify this, if we look back just 4 years in June 2021, when we started to see a bit more inventory then on the market, but still strong sales, our benchmark price was $458,300. Fast forward to June 2024, and we were at $608,000. This yearly decrease of 3.6% is not a crash, but a correction. Let's take a look at the benchmark price for each segment. Apartments were at $333,500, down 3%. Row, $450,300, down 3%. Detached, $764,300, essentially flat, but down 0.4%, down $5,100 from last month. Now, semi-detached, $496,400, up 2%. So as I said, the market is not crashing, but correction is certainly here, especially in condos and row homes. Detached home prices are more stable, but vary a lot by location and condition. Homes that show well and are priced right, still attracting multiple offers. But the overpricing game, it's not working anymore. When the market is going down, we need to price into the descending market. It's unfortunate, but better than sitting on the market and selling for less than you could have had you priced it correctly to start with. Given every situation is different, but be smart. Price correctly, market well, and don't wait too long. Homes that sit, they do sell for less. Now, how far will this correction go? Has a lot of people wondering whether now would be a good time to make a move, or do you wait a little longer? I think we still have some corrections to go. And if you're a buyer, you're probably thinking, why would I want to buy a house that's dropping in value? I totally get it. And that's a legitimate concern. I think focusing on what your reason for buying is important. And I'm a big proponent of planning to live somewhere long term, because your home will fluctuate in value no matter when you buy. But if you're focusing on the long game in real estate, you will likely fare out okay. I mean, we all have to pay to have a roof over our heads, and sometimes it's deciding if you want to pay someone else's mortgage down or your own. Remember, if you're trying to time the market, I mean, good luck. You only know it's hit the bottom when it starts to go back up again. So hindsight is 2020. Buy when you're financially ready and you find the home that you love. I'm really curious to hear what you guys think. Are prices going to drop drastically, bottom out? I always get the best and most insightful comments that everyone really should read. So please tell me what you're thinking, and while you're there, please subscribe if you found this video helpful. If you're considering buying, but you just don't know where to start, you can check out my buyer's guide linked below, or this video here where I explain it all in detail. I'm always a call or a text away, so feel free to reach out if you have any questions. Thanks for watching, and I'll see you soon.